Good morning, all. It is Tuesday, the 23rd, and I am in Utah right now. I've been here since last Wednesday. The 17th was my 25th wedding anniversary with me and Rizzo, and so we were supposed to be in Alaska, and I may have shared this previously, but I messed that up. So we found an opportunity to go out and hang out in Zions. We went snowmobiling, and now this week I'm in some meetings with a lot of other business leaders, and we're trying to figure out different ways to continue to make things better, more efficient, and that's what I'm seeking is higher efficiencies. So that's for the benefit of everybody involved, right? For the people who refer business to us, you, our clientele, my staff. We're trying to find out how do we increase our efficiencies, take what we have right now and improve what we have. I'm trying to hire more people to bring more people into it. But the problem it is you're trying to find people who have the knowledge and the background is real tough. We got an industry that's cannibalizing itself, taking from each other and offering extreme amounts of money to get people to go in, and then they last a certain length of time, then they move on because they want the money from somebody else. So it's kind of some crazy times. So we're trying to build organically internally. We have new people aboard right now, making some changes. We'll continue to enhance. What I want to show today is look at our bond market. This thing is definitely doing some interesting things. So we've got right now. Here's where our start is today, starting right below where it ended yesterday. But we're also within the channel we spent a lot of time in. So it's not like we're in territory we haven't been in. And I know that's gotten ugly. We've lost a lot of selling pressure has come about. If you start looking at the owner occupied world, man, it's really experienced a lot of selling pressure right now with the 3.0, where we tend to focus on the for the investors at the moment. We start seeing that it's really not far out of where we've been in the past. So it's still well within a lot of the ranges that we've continued to quote from. Now, I have purposely, when we send out quotes and we talk to people, I purposely quoted more in a different range based upon some other pricing sources that I have. So if the quotes go from one pricing source, the locks go from another pricing source, if I can lock in those cheaper pricing sources. That way we can continue to keep you, the investor, capable of running your numbers and still stay within figuring out your cash flow levels and whether or not it makes sense for you to be able to purchase that particular property within the rate, within the tolerances that you've set forth. That's why we purposely quote on the higher end. I've had many people call me up to, well, that seems a little high. Well, one a lot of times the high that they're commenting on is they're looking at like a bankrate.com or something off of the internet that's quoting the owner occupied rates. Well, we know there's what the difference is there. But also, we're trying to take a very more cautious approach on that quote side. So when you run your numbers, you feel a little bit more confident in what's going on. Now, what's going on that's pushing this around like this, especially when the Fed's been injecting so much capital into the mortgage-backed securities pools. It's one of these things where we've got jobless claims that are out, we've got housing starts that are out, and all the news was horrible for the economy, which would easily have led to more money being tracking over to the mortgage-backed securities and other bonds, improving those particular prices. These things are signaling that our economy is in trouble. We're having some issues out there. The other thing that we've noticed is that bonds have moved way away from a point that even be a healthy point for movement, even to a negative side. So we've seen all that go on, and I'm not, when we think about that, me personally, it's just Aaron trying to digest this after seeing what a lot of people have sent out as far as just factual data, what's happening, and they're all purely speculative as to why we would have this, because they're confused as to why we have this kind of movement in mortgage-backed securities pools. And ultimately, in fact, let me move this, you guys can see more of the bond pool here. Ultimately, what I am seeing, or at least what I think, is the reason why we do not have the type of money flowing into the mortgage-backed securities pools due to risks in the fears of the economy and all that, and pulling money from stocks and putting over here. One, there's a lot of crazy euphoric stuff going on in the stock market. Secondly, what yield are they going to get putting their money over here? Let's think about that. Even this right here, our 3% coupon, right? This means the interest rate is going to be above 3. There's going to be probably about 3/8 to 0.5%, maybe 3/4% in margin there, so you can pay for all the people trying to get the loan done, and then whoever put the money up is getting 3% on their money. 3% on your money is not it's nothing. Yet we're wondering why they are not putting more money in over here. Well, because 3% is not, in my opinion, enough to draw capital in from other places right now. They're having unusual highs. We're talking about the stock market, we're talking about crypto, we're talking about these other things that have just unusual movement. So we need to be very, very happy with what we've got right now. We're still well within our quote range that we'll be quoting from all along. So there's nothing to worry about there, as far as I'm concerned. But at the same time, we don't know where things are going to go. Very, very unpredictable right now. Extremely unpredictable what we're going to see going forward with our economy as far as the labor market is concerned, just with the political side of things. So for right now, again, remember, as a real estate investor, rates don't matter. It doesn't matter. You get to write things off that somebody else is paying. You get to cash flow from somebody else. You get to raise rents. I'll put out some more information on that again here in the near future that really break it down in great detail for you, so you have that to go off of. I'll come back around on Friday. I should be back in town, leaving tomorrow actually, and then get back at the normality of things. Thank you guys for paying attention here and for the questions and the comments, and we'll continue to get you as much information we can about the market. But right now, I'm just confused as what it is, other than the returns are just not that awesome in something like this.